Bitcoin to 100,000 by Christmas? Or maybe 500,000 next year? Hang on, did that analyst just say back down to 30K if the economy tanks? Yeah. Trying to predict Bitcoin's price is like wrestling a greased pig in the dark. Chaotic, slippery, and you'll probably end up covered in mud. Yet everyone wants that magic number. Forget the crystal balls and tarot cards. What if we could peek behind the curtain and see the actual signals the pros are watching, the data points they're obsessing over right now in May 2025? Let's dissect the madness and explore the factors shaping Bitcoin's volatile future. First, let's get this straight. Nobody, absolutely nobody knows for sure where Bitcoin's price is heading. If someone tells you they have a foolproof prediction, politely back away. They're likely selling snake oil, or maybe just overly optimistic. This isn't about giving you a guaranteed price target. This is about understanding the forces pulling and pushing on Bitcoin, the tools analysts use to make educated guesses, and the critical factors you need to watch for 2025 and beyond. All right, factor number 1, the expert opinions, aka the crypto gurus. Flip on financial news or scroll through crypto Twitter, and you'll find analysts throwing out price targets like confetti. Right now, you've got big names at major banks, research firms like ARK Invest, and influential crypto personalities calling for anything from a steady climb past $100,000 later this year to wildly bullish targets of $250K, $500K, even $1 million per coin in the coming years. Standard Chartered, for instance, has floated numbers well into six figures. Cathie Wood's ARK Invest famously has incredibly high long-term targets. Why the confidence? Their bull cases often hinge on a few key things: the ongoing impact of the 2024 halving constricting new supply, increasing adoption driven by those shiny new spot Bitcoin ETFs launched last year, Bitcoin solidifying its role as digital gold, or an inflation hedge, and continuous network growth. But hold your horses. For every bull, there's a bear growling about potential pitfalls. Other experts point to serious headwinds. Persistent inflation forcing central banks to keep interest rates higher for longer. The looming threat of stricter global regulations potentially stifling innovation or access. The immense energy consumption debate flaring up again, or simply the risk of another market bubble bursting as speculation runs rampant. The takeaway? Expert forecasts are useful for gauging sentiment, but they're based on different models, assumptions, and frankly, biases. Treat them like weather reports, good for getting a general idea, but things can change fast. Factor number 2, technical analysis, reading the digital tea leaves. Technical analysts ignore the news and guru opinions, focusing purely on price charts and trading volume. They believe past price action contains clues about future movements because it reflects crowd psychology. Fear, greed, hope, despair. Think of it as trying to predict the herd's next move by studying its tracks. What are the chart wizards looking at right now in May 2025? Key levels are crucial. Where is Bitcoin finding support? A price floor where buyers tend to step in, and resistance, a price ceiling where sellers take over. Breaking decisively above resistance could signal a new leg up. Falling below support could mean more pain ahead. Check the current charts for these battlegrounds. Moving averages like the 50-day and the all-important 200-day help define the trend. Is Bitcoin trading strongly above them, suggesting bullish momentum? Or is it struggling below, hinting at weakness? The relationship between these averages, like a golden cross or death cross, can sometimes foreshadow major trend shifts. Then there's the RSI, or Relative Strength Index. This momentum gauge tells us if Bitcoin is currently overbought, potentially due for a pullback, or oversold, potentially due for a bounce. Where is it sitting now? And of course, there are the historical cycles. Bitcoin has famously moved in roughly 4-year cycles, often linked to those halving events. Based on previous post-halving behavior, should we be in a major bull market expansion phase right now? Or are things different this time around, maybe thanks to the ETF's changing market structure? Technical analysts compare current patterns to past cycles, looking for echoes or divergences. But here's the giant caveat. TA is not a crystal ball. It's about probabilities, not certainties. Patterns can fail, signals can be wrong, and unexpected news can blow any chart analysis out of the water, especially in a market as notoriously volatile as Bitcoin. Factor number 3, the big guns, macroeconomics and global events. Bitcoin might be digital, but it doesn't live in a vacuum. Its price is increasingly tied to the wider financial world. What's shaking the globe right now that matters? Interest rates are huge. Central banks like the US Federal Reserve have been battling inflation. High rates generally suck money away from riskier assets like Bitcoin. Are rate cuts finally on the horizon in mid-2025, as many hoped? Or is inflation proving stickier than expected, keeping rates high? This decision massively impacts how much cash institutions and individuals are willing to gamble on BTC. Speaking of inflation, is Bitcoin actually behaving like digital gold, a hedge against rising prices? Sometimes yes, sometimes no. The correlation shifts. How is global inflation trending now, and how is Bitcoin reacting? It's a key narrative test. Geopolitical stability, or lack thereof, also plays a role. Major conflicts or global uncertainty can sometimes drive a flight to safety, and occasionally, some investors see Bitcoin as a non-sovereign safe haven, separate from national economies. Regulatory wins are also critical. Are governments globally moving towards clearer, friendlier crypto frameworks, boosting confidence? Or are we seeing talk of bans or harsh restrictions emerging from key economies? Keep an eye on headlines from the US SEC, the EU, and major Asian markets. And let's not forget institutional adoption. The launch of US spot Bitcoin ETFs in January 2024 was a landmark event. Are big players like BlackRock, Fidelity, and others still seeing significant inflows into these products in May 2025? Are more sophisticated crypto financial products launching? This institutional demand is a powerful force, potentially creating a steadier base of buyers than the retail frenzy of past cycles. So, how do you put it all together for a 2025 and beyond outlook? You weigh the evidence. Are the bullish technical patterns aligning with positive macroeconomic shifts, like potential rate cuts, and continued ETF demand? That builds a strong case for higher prices, potentially validating those six-figure targets analysts love. Or are the charts looking shaky while inflation stays high, rates remain elevated, and regulators start making noise? That paints a much more cautious, potentially bearish picture, suggesting consolidation or even a significant correction is possible. There's also the real possibility of conflicting signals leading to choppy, sideways price action for extended periods. The truth is, predicting Bitcoin's trajectory involves juggling expert sentiment, often biased, technical signals, often lagging or subjective, and massive global economic forces, often unpredictable. It requires constant monitoring and adapting. So, bullish charts, bearish macro, expert opinions all over the map. Predicting Bitcoin's next move is a chaotic dance between code, crowds, and central banks. The only guarantee? It definitely won't be boring.